Welcome. In this video, we'll explore the derecognition of property, plant, and equipment, or PPE. Derecognition is a crucial step in the PPE lifecycle, marking the point when an asset is removed from the financial statements. We'll walk through the reasons for derecognition, the accounting treatment, and the required disclosures. By the end, you'll understand how to handle disposal, calculate gains or losses, and meet disclosure requirements. Let's start by understanding what triggers derecognition and why it matters for accurate financial reporting. Recognition refers to the process of removing an asset from the balance sheet. For PPE, this happens when the asset is disposed of, or when it no longer provides future economic benefits. This step ensures that the financial statements reflect only assets that continue to contribute value to the business. Understanding derecognition is essential for maintaining the integrity of financial information and complying with accounting standards. One of the main reasons for derecognition is the disposal of PPE. Disposal can occur through sale, scrapping, or exchange. When an asset is disposed of, it's important to remove both the asset's cost and its accumulated depreciation from the books. This process ensures that the balance sheet remains accurate and up to date, reflecting only assets currently owned and used by the business. Another trigger for derecognition is when a PPE asset no longer provides future economic benefits. This could be due to obsolescence, damage, or technological changes. When this happens, the asset should be removed from the financial statements, even if it hasn't been physically disposed of. This approach ensures that only valuable assets are reported, giving stakeholders a true picture of the company's resources. When PPE is derecognized, you must calculate any gain or loss on disposal. This is done by comparing the asset's carrying amount with the proceeds received, if any. If the proceeds exceed the carrying amount, a gain is recognized. If not, a loss is recorded. This calculation is vital for reflecting the true financial impact of the disposal in the income statement. Disclosure is a key part of PPE derecognition. Companies must provide clear information about the measurement bases used, depreciation methods, and a reconciliation of the carrying amount. These disclosures help users of financial statements understand how assets are valued and how changes are reflected over time. Let's look at each disclosure requirement in more detail. Measurement bases refer to the methods used to value PPE on the balance sheet. Common bases include historical cost and revalued amounts. Companies must disclose which measurement base they use for each class of PPE. This transparency allows stakeholders to assess the reliability and comparability of financial information. Depreciation methods determine how the cost of PPE is allocated over its useful life. Common methods include straight line and reducing balance. Companies must disclose the depreciation method used for each asset class, as this affects both the expense recognized and the carrying amount reported. Accurate disclosure supports informed decision-making by users of financial statements. Reconciliation of the carrying amount shows the movement in PPE balances during the period. This includes additions, disposals, depreciation, and revaluations. Providing a reconciliation helps users track changes in asset values and understand the factors driving those changes. It's an essential part of transparent financial reporting. IAS 36 deals with impairment of assets. If a PPE asset's carrying amount exceeds its recoverable amount, an impairment loss must be recognized before derecognition. This ensures that assets are not overstated on the balance sheet. Understanding the link between derecognition and impairment is crucial for accurate financial reporting. IAS 23 covers borrowing costs. When derecognizing PPE, it's important to consider any capitalized borrowing costs. If the asset is disposed of, any unamortized borrowing costs should be written off. This ensures that all related expenses are properly accounted for and that the financial statements remain accurate. IAS 20 addresses government grants. If a PPE asset was acquired with the help of a government grant, derecognition may require adjusting the grant's accounting treatment. Any unamortized portion of the grant related to the asset should be recognized in profit or loss upon disposal. This ensures compliance with both IAS 16 and IAS 20. Fully understand derecognition, it's helpful to see PPE in the context of its entire lifecycle. This includes purchase, depreciation, revaluation, and finally, disposal. Each stage has its own accounting requirements, but they all connect to ensure that PPE is accurately reflected in the financial statements from acquisition to derecognition. The lifecycle begins with the purchase of PPE. At this stage, the asset is recorded at cost, including all expenses necessary to bring it to working condition. This initial recognition sets the foundation for subsequent accounting, including depreciation and eventual derecognition. Depreciation allocates the cost of PPE over its useful life. This process reflects the consumption of the asset's economic benefits and ensures that expenses are matched with revenue. Depreciation methods and rates must be reviewed regularly to ensure they remain appropriate. Some companies choose to revalue their PPE to reflect fair value. Revaluation increases or decreases the carrying amount of the asset, impacting both the balance sheet and equity. Any revaluation surplus is recorded in other comprehensive income, while decreases may be recognized in profit or loss. When PPE is disposed of, derecognition is the final step. This involves removing the asset and its accumulated depreciation from the books and recognizing any gain or loss on disposal. This step closes the life cycle of the asset in the company's financial records. Let's test your understanding with a mock exam style question. Suppose a company sells a machine for $10,000. The machine's carrying amount is $8,000. How should the company account for this transaction? Think about the steps: remove the asset and accumulated depreciation, recognize the proceeds, and calculate the gain or loss. Company should derecognize the machine by removing its cost and accumulated depreciation from the books. The proceeds from the sale, $10,000, are compared with the carrying amount, $8,000. The difference, $2,000, is recognized as a gain on disposal in the income statement. This process ensures accurate financial reporting and compliance with accounting standards. Common mistake is failing to remove both the asset and its accumulated depreciation during derecognition. Another pitfall is not recognizing impairment losses before disposal. To avoid these errors, always review the asset's carrying amount and ensure all related entries are made before derecognition. Summary: derecognition of PPE is a vital process in financial reporting. It involves removing assets that are disposed of or no longer provide economic benefits, calculating gains or losses, and making the necessary disclosures. By following the correct procedures and understanding the interactions with other standards, you can ensure accurate and transparent financial statements.